What's up, everybody? Today I'm going to reveal the SBD. The SBD is the seller buy down. So if you're a realtor, you're really going to want to watch this because it's going to help you either not cut your price at all or cut it a smaller amount when a price cut's needed to get a deal done. If you're a buyer or a seller, you're going to want to learn this so you can make a deal happen. If you're ever going to buy or sell a house, you're going to want to watch this video. So without further ado, let's get started. I'm so excited about this, I had to stand up for this one. Okay, I read an article about how to get subscribers on YouTube, and they said you need to respect your listeners, your viewers' time. So I'm gonna talk as fast as possible. This is as fast as I can talk. I'm sorry, I'm just not a fast talker. But okay, we're gonna do this video in 5 steps. So number 1, I'm gonna explain what the seller buy down is. Number 2, I'm gonna back up, talk about a couple things to give you context on how it's gonna work. Okay, so number 3, we're gonna go over the numbers in an example. Number 4, I'm gonna have Steve Carell explain the 3 outcomes to a conflict in only a way that he can. It's about a 2-minute clip I'm gonna insert, but I think you'll find it informative and enjoyable. Number 5, we're gonna wrap it up and we're gonna talk about how the seller buy down is the unicorn of outcomes. It's the win-win situation. It's the unattainable, inconceivable, impossible outcome that is the win-win. So without further ado, let's get started. What is the SBD? What is the seller buy down? Who calls it SBD? I don't think anybody calls it that, just me. So what is the seller buy down? Simply, the seller buy down happens when the seller pays for the buyer to have a lower rate on their mortgage. That's it. Okay, so before we get into example, let me back up and give you a little bit of context. Okay, the 2 things I wanted to get into a little bit of detail on to give you context of you know, how this will work, and for the example to make a little bit more sense is this is a rate sheet. I'll probably flash it up on the screen, okay? What I want to explain, it doesn't matter the exact rates, you know, your FICO score, your loan to value, things like that will determine your particular rates. But what I want to talk about is just the concept that you can get a higher rate and either get a smaller origination charge or even get a credit towards your closing costs. So as the rate goes up, you can get credits towards your closing costs, or if you're paying, you'll pay less as the rate goes up. Conversely, you can buy your rate down. So as your rate goes down, you can do that. It'll cost you a little bit more. So that's the concept that makes this work. As the rate goes up, it's gonna cost you less. As the rate goes down, it's gonna cost you more. So when you say, hey, I'm locked, my rate's locked, I'm locked at whatever, you're locked into that rate sheet. So if rates get better, you're in that rate sheet. If rates get worse, you're in that rate sheet. But on that particular rate sheet, you can, subsequent to its locking, go up or down. And when you lock, your costs at each of those rates is set. So they have an actuary somewhere. I don't know what he looks like, but there's an actuary somewhere. And what he's doing is he's done the math for the lender, and he's decided, I don't care what rate they pick on this sheet. I think we're gonna get paid about the same regardless, so let them pick away. So you get this rate sheet and you can pick the rate. So that's that. The second thing is, I'll flash it up on the screen also, there's what's called IPCs, Interested Party Contributions. So the term, based on the loan type, based on the down payment, there's limitations on the amount of money interested parties can contribute to the buyer. So an interested party is the seller. There's a few other people, but in this case, the one we're worried about is the seller. So there's limitations on how much a seller can contribute, and we just want to make sure we're within those rules. Those two items are things I want to talk about. Now let's get to the example. Let's fast forward. Okay, now let's cut to the example. To begin with, I picked a $600,000 purchase price with 20% down. I picked that price because that's pretty close to the median home price here in Ventura, California. 20% down is a common down payment. So you'll see here, this is what the payment's going to look like for the buyer in that scenario. Now, if a buyer came along and said, hey, I think $600,000 is just a great price, I'd love to buy the house, then that's the end of the story. That's a done deal, and that's a happy ending. Now, where the seller buy down comes in is when that doesn't happen. So either you thought it was worth 600, and I'm talking to the realtor, you thought it was 600,000 and it wasn't, or you thought maybe it should be priced at 570, but the owner said, hey, no, this thing's worth every penny of 600,000. So for whatever reason, your price here, the market's saying it's worth 570. You need to do a 5% price cut. That's $30,000. You have a buyer, hey, 570, I'm all over this place. 600, it's too much. And you have that gap and it can't be closed. And the seller's saying it's worth 600, the buyer's it's worth 570, and you have that gap. What are you gonna do? What could we do? What's the solution? I watched this video one time by this guy, Brian Harris. He talked about the seller buy down, and he said that's like closes deals other people can't close it, like gets it done. Like, let's try that. Let's do the seller buy down. Before we look at the seller buy down, let's look at the 570 purchase price transaction and what that looks like. So the seller's obviously gonna make $30,000 less, and the buyer's gonna have a lower payment. So buyer's happy, seller's upset. Okay, so now I'm gonna go through the examples where the magic happens. But right here is a PDF I generated detailing this example. You can send me an email and I'll email you this PDF and you can have it. No sweat. Let's go over the example. We start out with a $600,000 purchase price. Payment's going to be $3,202. If you've done a price cut, the payment's going to be $3,045. Buyer's going to save $157 a month with the price cut. Of course, that's the scenario they would like to go with. The seller doesn't like that. They don't want to cut the price $30,000. Is there a compromise? The seller could keep that $600,000 purchase price, pay $16,600 to lower the buyer's rate by 0.75%. The buyer now has a payment of $29.86. That's a savings of $216 from the original list price and $59 from the reduced $570 purchase price. So the buyer's in a much better position with the buy down. They're going to save over $12,090 over 5 years. They're going to save $55,205 over 30 years. So the buyer's in a better position. The seller doesn't have to make that big $30,000 price cut, but they do have that additional cost of buying down the rate. So they're going to net $13,340 more with the seller buy down than they would with the price cut. This is that ever elusive win-win situation. I've referenced win-win a couple times. There's 3 different outcomes to a conflict. So I would go into detail, explain those, but you know what? Steve Carell explained it better than I'd be able to in this short 2-minute video. Well, we have a change of plans. Turns out I'm not allowed to post that video. So I'm just going to tell you about it and why I wanted to include it. So the video is about a conflict in the workplace. It's from the show The Office. The episode's titled Conflict Resolution. So this is the picture in question. I used it as the backdrop to the thumbnail for my video here. But in the episode, two co-workers disagree on this picture being up. So Angela really likes it. Oscar is offended by it. So if the picture's either left up or taken down, that would fall under the category of win-lose, because one person's happy, one person's upset. Okay, so they came up with a compromise of leaving the picture up on Tuesday and Thursday and taking it down the other days. Is not ideal. So in a compromise, a lot of times we say in life, life's about compromise, and real estate's certainly about compromise. But out of the three outcomes, it's considered almost a lose-lose, because both sides feel like they're giving up to make it happen. So moving on, they came up with a solution where Oscar, the character who didn't like the picture, would wear the picture on his t-shirt, and that way he doesn't have to look at it, but Angela can see it anytime she looks at Oscar. So I thought that was really funny. And they were coining that a win-win situation. And why I wanted to include that video is because it just shows how rare and difficult it is to come up with a win-win situation. And the seller buy down, when used appropriately, is a tool that'll allow you to make that happen.
Win-win, make the poster in a t-shirt. Win-lose, take the poster down. Compromise, Tuesdays and Thursdays. And the answer is make the poster into a t-shirt. Win-win.
Win.
Fine.
But
I think that video is hilarious, but it does talk about, it's a win-win situation. There's not a lot of them. When you have opportunity to create one, it's really cool. I didn't come up with this concept myself. I'd like to credit the mortgage coach community. I was watching a coaching call, they're talking about it, and I thought it was a great idea, so I wanted to share it with others. Now, this is one of those rare win-win situations that you can create for your clients. So, or if you're a buyer or seller yourself, mention, hey, what about the seller buy down? And the agent might say, what's that? And then you'd say, watch this video. And then you'll add to it and subscribe. So listen, if you found any value in this, please subscribe, like, share, all those things. I really appreciate it. I'm having fun making these videos, and I'm appreciating the feedback I'm getting. So look, get out there. If you're at an impasse, you know somebody who is, just say, hey, what about the SBD? And if I can help in any way, I'd love to. That's all for now. Until next time, have yourself a great day. It's Saturday, I'm taping this. I'm gonna go play with my kids, and I will talk to you next time.